All right, everybody. So we're going to start today talking about growing our business. Man, 2025, 2024, 2023, I feel like the last couple of years have been really rough in real estate. It's been survival of the fittest. It's been making lots of contact, having lots of conversations, really trying to do as much as you can do to drum up business. And one of the things that we found that's really an untapped group of people is people who have complicated income, complicated documentation, out of the box. They don't qualify with a regular bank or credit union or online lender, and they just need alternative financing. And we've seen this business grow about 60% from 2024 to 2025. Right now, I'm currently closing two loans that we're doing for two guys that are utilizing a P&L instead of bank statements. I recently closed two deals for an investor to do a fix and flip loan. So we're doing different out-of-the-box programs for people in the past that we thought, couldn't get a mortgage, right? It would be like, no, you can't do anything. And really been able to help people utilizing some non-traditional programs. So we're going to talk about that because I think it's important to have as many bullets in the arsenal as possible. So I'm Joe Soto, husband, father, all around good guy who does loans. I lend in all 50 states. So if you're looking to finance anywhere in the United States of America, your buddy Joe can definitely help you out. Cool. So Cross Country Mortgage is my parent company who I work for. We're the #1 retail lender in the United States of America. So what is really different about us is that we basically underwrite all of these non-traditional loans in-house. So in the old days, it was like a hard money lender that did some of these programs. Now, Cross Country Mortgage, which is a giant, reputable, huge company, is basically underwriting and securitizing these loans ourselves. So making it much better for our clients, for consumers, for agents, for everybody to win. And so we offer all different types of programs, right? We offer all the traditional loans. Oops, a little delay in my clicking. Traditional loans, right? Fannie, Freddie, jumbo loans, construction loans, reverse mortgages, home equity loans. I mean, we do all different types of financing, again, in all 50 states. But what we're going to talk about today is really non-QM, and non-QM is a non-qualified mortgage, right? It allows people with non-traditional income or past credit events to get approved for a mortgage, right? So even if the client has no W-2s, no pay stubs, no tax returns, we have options, right? We have asset loans, we have I-10 loans, we work with real estate investors, people with unique income, right? They're self-employed and they're W-2'd, or they just opened a business, or they get money from a commercial property, or they have income coming in from a trust. I mean, all types of stuff that we're seeing to try to help people, right? We have a client right now that's got lots of assets. We're literally just using their assets to qualify and not making them move their assets. So lots of different options to try to get people. And we're going to talk about some of these programs. We're going to go into different programs and who would qualify for these programs, right? So who's the ideal avatar? Who would work for this particular program? And we're going to go through all these different programs, give you the highlights, give you the basics, tell you who would qualify. That way you can know if you talk to somebody or if this is you yourself that you would benefit from this, right? So let's roll through here. CCM Signature Expanded. So CCM stands for Cross Country Mortgage. And this, our Signature Expanded program, basically is flexible guidelines for borrowers who don't meet traditional standards. Non-traditional income. So this is the program when the bank says no, you call Joe. A lot of the banks are very rigid with their guidelines. You can only have a 43% debt ratio. You can only use certain income to qualify. They're very restrictive on if you're self-employed, if you have a business, if you have other debt. Like, they just look for reasons to tell you no. This is like our rescue loan special, right? Because we're extremely flexible. We have common sense underwriting, streamlined documentation. We allow lots of exceptions. We're doing non-warrantable condos. We allow you to close in an LLC or trust or corporation. Really just want to do the deal if it makes sense. We're not going to turn away somebody who's very well qualified because it doesn't fit into the box of what the bank says, right? So we want to expand the guidelines, okay? So most popular program that's been around for a long time is a bank statement loan, right? So this is for somebody who's self-employed. We can use bank statements in lieu of income, right? And this is basically for the person who brings in a lot of money but writes off a lot of money, because we can use the bank statement income to qualify, right? Gives DACA and I-10 borrowers a way to qualify, right? And basically the way it works is you qualify off of the average of deposits over 24 months. So 12 or 24 months, usually we do 12 actually. And basically the way it works is, let's say Mr. Home Buyer is depositing $25,000 a month from his business. That would mean in a year he's got deposits or revenue of $300,000. But on his tax returns, he writes that $300,000, he writes it down to $25,000. Well, on a traditional loan, you're not going to qualify with $25,000 of income, right? However, with the bank statement loan, what we could do is we're going to take those $300,000 of deposits, we're going to divide that by 12, which would be about 25 grand a month, and then we basically divide that by 2. And so for Mr. Borrower, we're going to give him credit for income of about $12,500. So 50% of just the deposits. We do not look at the withdrawals. We look at transfers. But if you're putting in 25,000 and withdrawing 25, we don't care, right? So that is a huge, huge win for somebody who is self-employed, right? It is a huge, huge win. 90%, you could put 10% down on that program. You could have a 620 FICO score. Loan amounts go from 100,000 to 3 million, and the max debt to income ratio is 50%. So that's your typical bank statement loan for somebody who's self-employed, has a lot of deposits, but doesn't show a lot of income. Okay, that's the avatar on that program. Next program is asset qualifier. So this is where we base your income depending on financial assets rather than DTI-based income, okay? This is for somebody who's got a high net worth. We're helping somebody with this right now. They've got upwards of about $2.5 million in different retirement accounts, right? They're only taking a small withdrawal every single month, but they want to buy a new property. We can actually use that asset to qualify them, right? So we use the assets instead of income to qualify. Here's the big part. No liquidation of assets is necessary other than the funds to closing. Because the big challenge you have with most people, like myself and like most other people, is their assets are tied to stocks, right? Or their assets are tied to Roth IRA or something like that. So if you pull the money out, you're going to pay a capital gains. You don't have to liquidate. You can use checking, savings, retirement accounts, stocks, crypto, I mean, everything, right? But this is basically for the client with a lot of assets, doesn't show a lot of income, not a lot of income coming in. And again, 10% down, 620 FICO score. We offer fixed and ARMs, loan amounts up to 3 million. So that is just asset qualifying, okay? No income verification, like literally, we don't care about job or anything, okay? Investor cash flow. So this is a huge one that we're using for people buying investment properties, specifically for people buying out of state. Unfortunately, in California, we're not seeing a lot of this program, but my investors buying out of state, if they're buying in, Georgia, I've got clients buying in Kentucky, Ohio, just all of these places where they're buying properties. And again, their taxes don't show any income, right? They're taking big write-offs on their income that they make. Basically, what we do is we just use the rent of the property that they're buying to qualify, okay? And it's a really simple calculation. We take the rental income, divide it by the principal, interest, taxes, insurance, and HOA, and that gives us our coverage ratio, right? Our debt service coverage ratio. Basically, the rent has to be less than the mortgage. right? Or more than the mortgage. Sorry, the rent has to be more than the mortgage. So if you're buying a property and the mortgage payment is $2,000, then the property must rent for $2,001 in order to qualify. So my clients who are putting 20, 25, 30% down and buying investment properties, this is a really easy way to start leveraging more and more properties without being able to qualify, because a lot of our clients, they write off their rentals, they write off, the income coming in on the rental properties, but they still want to purchase more properties. That's how that works. Okay. See if this lets me click. Cool. This is our signature expanded full doc. So this is like the granddaddy of all of the expanded programs. This is the one that we use to when the banks say no, essentially, right? It's the full doc program, meaning client has a job, client has income. Usually they're self-employed, right? Like they can verify it all, but the lender that they're working with is saying, yeah, you would qualify, but your DTI is too high. Yeah, you would qualify, but we're not letting you use this portion of the income. We're only letting you use that portion of the income, right? That's this is our rescue deal best program. This is also for people looking for buying non-warrantable condos, condotels, rural properties, over 20 acres, something with ADUs. So if you wanted to try to use ADU income, but you typically can't, we might let you use ADU income on this program, which would help you qualify, right? Also for people who have recent credit events, right? Divorce situations, things like that. Maybe they had something going on. Maybe they had a late payment, but it was health related and they have a large down payment, like they can still buy. We can get it done with this program. Very exception friendly. Very much that when the banks say no, it's like, hey, can you do it this way? And we've saved a lot of deals utilizing this program. So it is our number one, deal saver. Again, 10% down to a 620 credit score. DTI goes to 55%, right? This is the big one here, because most banks, especially on jumbo loans, only go to 45. So if you ever run into a file or a client with a DTI issue, this is what would save the day and close the deal. Foreign nationals. So we do have a program for borrowers living abroad and financing an investment property here. You don't need U.S. credit. Foreign nationals who cannot obtain, this is for no U.S. credit, and foreign nationals who can't obtain traditional financing. Again, this is where we're qualifying you on assets or debt coverage, meaning they have to put enough of a down payment so that the mortgage payment is less than the rents. We don't care about DTI. We don't care about foreign liabilities, right? So this is for non-U.S. citizens looking to invest in the U.S. Typically, you're going to put 25% or more down. We don't even care if you have a FICO score. If all your income comes overseas, we're fine. Income loan amount up to $3 million. So very flexible program for foreign nationals. If you meet somebody who's got, they're making their money in another country, but they want to buy here, it's a really good option for them. Scrolling through. Signature expanded 1099 program. So this one here is for people who receive a 1099 as their primary source of income. So think of independent contractors, real estate agents, sales employees, insurance agents, sometimes per diem nurses and doctors, right? Anybody who gets a 1099 for income, just a 1099, okay? We can streamline the documentation to compare with a full doc or a bank statement loan. And how does it work? We take the 1099 statements, we use 1 or 2 years to qualify, and we will give the client 90% of their 1099s to qualify. So if you're a real estate agent out there and you have 1099s that show $200,000, but you write that down at $20,000, right, on your taxes, we would actually give you credit for $180,000 of income. That's the difference between qualify and not qualify, right? So that's another really, 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 really good program. Real estate agents, tech employees, independent contractors, gig employees, people who work in the music, film industry, they typically just get 1099s. They might have 20 of them, but it's just 1099s. Insurance agents, like I said, they usually financial planners. Sometimes they just get a bunch of 1099s. We can qualify you off of that. This is a really good program for those particular types of clients, okay? CCM signature expanded profit and loss. P&L stands for a profit and loss. And we actually just got a clear to close on a deal utilizing this today, right? And a P&L is the profit and loss. So again, looking at self-employed clients, it's a gift and the curse, right? They make revenue and then they write everything off so that they don't have to pay a lot of taxes. Well, with this P&L program, basically we allow the business owners to use a professionally prepared 12 or 24-month profit and loss. Basically what we get is we get a P&L from their CPA, EPA, or CTEC. We get a letter saying that the CPA or tax preparer is not an employee, not related. There's certain things that they have to say. And then we qualify them based off of just what's on the profit and loss, right? This is for people who are self-employed, who have non-traditional income or inconsistent cash flow, meaning maybe they work off the books, right? They bring in money, but they don't report all of the earnings on the tax returns, right? Or they're taking a lot of write-offs on the tax returns, but they're just trying to do that to try to lower their gross income. So there's ways that they can do the profit and loss to help the client qualify. And we will take the income off of the P&L, okay? Oops, I hit the wrong button. Go up. I-10 programs. I-10 program is for somebody who does not have a W-2, right? It's a program for borrowers who live and work in the U.S. They have an individual tax ID number. That's what I-10 stands for, individual tax identification number, to qualify. So they probably file tax returns with an I-10. They probably have had the I-10 for a long time. They just don't have a social, right? This allows you to qualify for people who don't have a social security number. This is for only clients who have an I-10 number, a tax ID number. On this program, you could put full doc, you can go 10% down, right? You're going to need reserves too, but 10% down on a bank statement loan, 15 on a DSCR, 25% down. So there's some options for clients who don't have tax ID, who don't have social security numbers, can still purchase a property. Very, very flexible on these two. We've been doing a lot more of these programs for clients as well. And then on our expanded, we do a lot of unique property types. So we do manufactured homes, right? Manufactured homes as a primary residence. We can do full doc, bank statement, asset qualifier, 1099s, P&Ls, VOEs, must be a primary residence, must be affixed to the land, and they must own the land. So no lease land with a manufactured home. Mixed use properties. This is for properties that have buildings that have business use in addition to normal use. We'll do those as well. Borrower is not required to occupy the property or be the operator of the business, right? And we can use up to 30% of the income to help qualify. That's a mixed use property, right? Let's just say it's a home and there's a store on the property, right? Sometimes we're seeing that in some parts of LA and things like that. That could be a mixed use that we could possibly do financing on, right? Maybe it's not a commercial, maybe it's just a mixed use. So again, we're willing to look at all the different options, all the different programs and things like that. A big thing is exceptions, right? So again, where we really excel is, again, when the banks say no, call Joe, because there's been deals that we've gotten done because another company said no, but we let it go, right? We had a deal where the client had a bunch of NSFs, insufficient funds. Well, their bank said, hey, we're not going to lend you money if you're not paying your current bills on time. We actually got that deal done. We've gotten deals done with multiple non-warrantable condo features. We've used business use of assets. We've gotten deals done with insufficient trade lines. We've gotten deals done with less than 2 years of self-employment or short on reserves. Like, we're always, again, want to have a common sense approach to this. We want to have it make sense for the client. We want to have it make sense for us, but we want, we wanted to look at it from a real life. Can this person really pay the mortgage? And a lot of times, banks will decline a loan because a client doesn't have a landlord history, right? Meaning we can't verify where they lived at prior, but they're putting 25% down. They've got a stable job. They've got good income. They've got good credit. They just aren't checking this one little box. And the bank says no, right? We'll come around and say yes on that deal and keep the deal together. So that's our number one thing. I'm going to come through here. We're not going to talk about the affinity program. We'll go through this buy now, sell later. Buy now, sell later is basically a couple of different versions of bridge type of financing. So basically what we allow you to do is we allow you to buy a new property before your old property is sold, right? So it's not a total bridge loan, but it gives you the money to purchase the new property beforehand. So bridge loan in the old sense used to feel like a hard money loan, right? Now they're not. Like, now we really want to help you get into your home. So we've got basically 4 different options when it comes to buy now, sell later financing to help you get the equity out of the home that you're in to purchase the home that you want, right? But the challenge is that your current home hasn't sold. So we've got a couple of different options for that. We're looking at a bunch of different things as far as loan to value and stuff like that, but a number of programs that we're able to do with this. We offer a lot of co-branded marketing stuff. We use Total Expert. If any of my realtor friends want to get access to Total Expert, just let me know. We can get you on the website, give you access to all the different flyers, emails, brochures, postcards, any of the stuff that you need to help grow your business. And that's pretty much everything, right? That's all the different programs and things like that. The one thing I didn't have a slide on here for was, let's say, hard money or fix and flip loans. We are doing more of those for investors, for people who are looking to buy a property, renovate it, and sell it. We do offer that program as well for people looking to do fix and flips, doing a lot of reverse mortgages as well right now. So definitely lots of different options and things like that for everybody. The name of the game and what we're seeing in this year, or I would say the last couple of years, is people who want to buy who don't know how to buy. People who want to sell but don't know how they can sell, right? And our job is to know the programs available, know the options available so we can get them into a home, right? That is the number one thing. So some of these programs are great to have in your arsenal. If you talk to somebody and they're like, I don't know, I don't think I qualify, like, do a little bit of digging, find out a little bit more, and see if, they're open-minded to having a connection or a conversation with us to get them into the house. So that's what we can do. Before I wrap up, I'll ask, are there any questions? Any questions out there? If you have any questions, you can just shout out. If not, I will give you back a little bit of time. And here's my contact info. If you have questions about scenarios or things like that, you could always reach out anytime, and we definitely run through any different type of scenario or what a client's going through or what a client was told in the past. I think that's where we've had a lot of success, is just brainstorming with people and with realtors about, like, hey, here's my situation. What do you think? And then just trying to get it done, right? That's the name of the game. So cool. I will I will log off, and if anybody has any other questions, you could always give me a quick shout. But I appreciate your time. Have a great one.